Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to look at basically oil, natural gas, kind of energy, the energy area, oil and nat gas. Not really too much uranium in this one, but we'll take a look at some articles I've been seeing, a little bit of Twitter, a little bit of some quotes for some people who are oil guys, and I'll give you my financial opinion as we roll in. So what I have here in the upper left is the China oil demand. And you can see the lockdowns have had a big impact on demand. And looking at the forecast, which is this dotted line for 2022, it's coming right back up quite dramatically. And that could have a huge impact on the physical tightness in the markets coming up here in May, June, July, and so forth, as the demand is increasing actually quite dramatically. That's going from maybe 13 million barrels up to 16 million barrels by the end of summer. U.S. total rig count continues to increase. We haven't seen gargantuan amounts of oil coming online from America. We've seen some steady production increases, but it's not back to levels that were in 2019. Now, I've got all these crises that people are warning of. It says, analysts warns of a fuel shortage crisis in the United States. Fuel shortage, huh? Low fuel inventories could lead to a crisis this summer in the United States. Refinery outages could be disastrous during this period of supply tightness. Sankey, which is, I guess, one of the guys, says, we've never seen inventories this low, particularly in the Northeast. So we have really low inventories of fuel. Another, I've double put that one in there. Looking here, it says 1 billion people are at risk of rolling blackouts this summer. And I think that's across the world. So that's definitely a risk. And I'm going to get into later on a few areas where we could see it in the United States. It says summer heat could wreak havoc on the Texas grid. Experts warn that Texans should be prepared for another massive grid failure. While Texas has made some progress in increasing surplus energy flow to the grid, high demand may overwhelm embattled ERCOT. Despite warnings, ERCOT remains confident that it can manage the increase in energy demand this summer. That's what their opinion is. We've got Eric Nuttall here. This is the big three: crude, gasoline, and distillate. The inventory deficit to the 4-year average. Still going down, guys. It is still bullish. We are still drawing down those inventories. Coming on down. I thought this was kind of funny. This guy says, is that all you need? And he's got AMD, Planetaire, Netflix, Tesla, Disney, NVIDIA, all in his portfolio or on his shopping cart. This guy says, yes, he only has one thing called energy stocks. As weird as that sounds, that's kind of what my portfolio is like. I just spread it amongst a bunch of different energy names in natural gas, oil, uranium, energy service companies. But it's pretty much based around energy stocks. I do have some rare earth metals and some other things. I do have some precious metals and royalties, but it's mainly energy stocks. Let's get through some quotes here. This is going to be kind of fun. So it says, the exhaustion of OPEC spare capacity in the coming months will be a watershed event for a sector already suffering the ramifications of years of insufficient investment in long cycle projects. Aramco, world running on less than 2% spare capacity. Cycle time matters. 5 years for Saudi to add 1 million barrels a day of new capacity. If we could do it before 2027, we would have done it. This is what we tell policymakers. It takes time. An energy crisis, years in the making, is equally years in the solving. So this thing's going to stick around for a while, guys. We might get 1 million barrels of capacity at 2027. We're gonna hit a problem here. This isn't going to look pretty here. Headline: Warren Buffett significantly increases Chevron bet, now in Berkshire top 4 positions. He's discussing now and why he bought 14% of Oxy and buying CVX. Nice to see Buffett bullish on oil and gas equities, potentially inflation play. Well, I think he probably understands that we have a crisis coming, just like Eric had alluded to up here. And it's not going to be solved very quickly. Josh says there's not enough oil production capacity. There's not enough natural gas liquids production capacity. And there's certainly not enough natural gas production capacity and coal. So someone said PTSD from prior cycles and this time being different can make it scary to be bullish on energy. PTSD, one of the core reasons why this time is different is because we have that post-traumatic syndrome disorder from prior energy cycles. And what they mean by that is whenever the prices went up, companies would spend a whole bunch of money and just flood the market with as much production as possible. They're being much more disciplined this time around. Not that they really need to be. I think they're finally realizing that the production that they have, or the reserves that they have, and the production profiles aren't going to be as easy as last time. So they're keeping what they have because they're starting to figure out how valuable it could potentially be. That's my take on it. So coming over here to the right, this is the estimate required spend to meet demand is $600 billion higher versus the prevailing outlook. This is from 2021 to 2025, underspend by $135 billion. And you can see the yellow line, the capex to meet demand should be ramping up dramatically. And then this is the prevailing spend that they have in the budget or plan. There's a large gap between how much we need to spend and how much they are spending to get production to be put online for this shortfall to go away. This is the U.S. Actual drilled uncompleted well count and trajectory 2014 to present. So we've got this nice, good drilled uncompleted inventory increasing all the way up till the COVID era, just past it. And then we have a large decline in drilled uncompleted wells in inventory. We are eating up the drilling that we've done in the past. So that is a trend which could lead towards a decline in production at some point. This is daily oil production shown by year of first flow. This is the shale area. This was coming on up. I believe this is the shale, or maybe this is all production in the United States. This is all production in the United States. You can see this thing peaked before the medical event, and then it's declined, and we're trying to bring it back up. But it doesn't look like we are going to hit the peak production before. Some of these are shales in here. I think this is all shale. But looks like we are going to head lower, potentially. So we'll see what happens there. One thing I wanted to put in here, so the rolling blackouts that they were talking about, I wanted to get a little bit of where in the United States this could potentially happen. It says many states under the Mid-Continent Independent System Operator, MISO, such as Arkansas, Louisiana, Michigan, Wisconsin, Iowa, Minnesota, Iowa. They got Iowa in there twice, guys. Illinois and Indiana are either entirely or partly at high risk. The red is the high risk areas. The elevated, I'm in the WECC area, I think. And then they got the SPP, Texas, the ERCOT, SRSG, and California MX. So it's actually, a good little over half, it looks like, of the entire United States could be subject to these rolling blackouts. And right when you think this is what's going to be kind of crappy is you're going to be making all this money as your investments go up in natural gas and oil and all this other stuff, but it's still not going to prevent you, if you're in some of these areas, from sitting with your electricity off in the middle of summer getting swamp sack. So that's kind of weird to think of. I think it's kind of funny because I don't even use the. I just go to the basement where we don't get too hot here for the most part, and it's cool during the winter, or cool during the nights. Just midday it gets a little bit hot here. But that's overall what I wanted to cover. There is the warnings that analysts are giving of a fuel shortage, of potential electricity shortages, rolling blackouts is what they call it, and fuel shortages. It does look like we could potentially be peaking at some point in oil production. I've read some articles about maybe natural gas peaking a few years out. I don't know if they're necessarily right, but sure seems like it might be. Again, I don't necessarily know for sure, but I do think that we've kind of hit the best places in the United States, and eventually we will turn over. And if the entire world is all kind of turning over at the same time, we could see some ridiculous pricing in energy. And we're going to need some solutions. I don't know what those solutions are. I think that it's going to be mainly on the conservation side. Prices go up and people will just use less. It doesn't mean that they won't do it. It means that they'll maybe buy different things that conserve more energy. So that's my take on it. And obviously, we can take a whole bunch of conservation of things probably out of the system. Things that are very energy intensive or things that aren't very efficient will definitely come off the grid or off the system in terms of cars and whatnot. And then you'll be left with these little four bangers running all around, or hybrids. Maybe some electric vehicles too, maybe get sold more if they can get the materials and the costs remain low. That is yet to be seen. But the cars I own, they get pretty good gas mileage. And I've got my sports cars, which they're okay. They don't get great mileage, but they don't get horrible mileage. But yeah, that's what I've got for today. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't. Subscribe to the website, Platinum Membership. I am positioned for this coming in the energy sector. So hopefully it's not as bad as what most people think. Obviously, I wouldn't want to be limited on how much fuel I can buy, but I don't really use that much, so I don't think it would impact me too bad. But overall, yeah, that's where we're at, and that's what I'm seeing in the Twitter feeds and the articles. That's all I got. We'll see you next time. This is Finding Value.